All right, so I want to talk to you guys about your credit score. So many people don't even know what their credit score is, what's on it. They come to me and they're like, I don't even know where to start. This is where you start. You go to freecreditreport.com. You can see things on Credit Karma, you can see things like that, but for the most part, that's where you need to go to kind of see all the information that's on there. Now, a lender is not necessarily going to just look at a credit report. There's specific things that they look for in it. So go ahead and explain that.
Yeah,
first.
absolutely. So when you get a credit, first of all, there's three credit bureaus, Experian, Equifax, and TransUnion. So they all report different things at different times. So they could be different scores. So as a lender, we take the middle of those three scores, and that's the qualifying credit score that you have.
And if you've got two people on the loan, they take the lower person's middle of that score.
Yes.
So just something to think about.
Yeah, absolutely. So we look at that. We look at anything on there as far as the credit report goes. If there's any collections that are on there, a collection is a bill that's been turned over to a creditor, and then it's been reported to you. You might not even have known about it if you have moved. So you might not even be, or might be on there and you're not aware of it. So me as a lender, I will look through the entire credit report and see if there's anything that you can do to help boost that credit score, to help you get a better interest rate, and which would ideally lower your payment. Or it would help you get your higher credit score to be able to qualify if your score is not high enough to qualify for a particular loan right now. So looking at that report, analyzing it, seeing what we can do to get your score up is something I do. Also, if you have a credit card, you might pay it off every month, but you have a higher utilization, which means if your credit limit is $1,000 and you currently owe $950, even though you pay it off every single month, the time that I pulled credit and you're almost maxed out can really hurt your credit score by a lot of points, 30, 40, 50 points potentially, based on how high your utilization is.
Utilization, big word there. So something to consider too when you think about how you make your payments. What I learned from Josh is pay bigger chunks at a time. Be strategic in how you're paying your credit card. Again, talk to a lender like my buddy Josh Holly here. He can help you understand what things you need to pay for faster, just to kind of get that credit report to where it needs to be. Also, a lot of first-time home buyers are like, well, I don't have any credit. You know, that's great. I have no credit cards. I've got no debt. That's actually not a good thing. A credit card is actually an indication to the bank that you're able to make payments on things. So that's a good indicator for them. Josh actually had a great tip that I had no idea about.
I'll deal with a couple a couple of borrowers that are clients that follow the Dave Ramsey program, which is don't put anything on credit at all. So for someone might want to follow that program, you can self-report your rent, your cell phone, your utility bills, which will record on-time payments. Those aren't necessarily on a credit report, but you can put them on there just to communicate with the credit bureaus that you are making on-time payments if you don't have a good amount of established credit. Also, one other thing that we have that's really cool, lenders have the ability to do what's called a what-if program. So if you have a credit card that's close to being maxed out, say $500 credit card, and you owe $500 on it, if I can put in a scenario where if you pay that credit card off, your new credit score will jump to this score and will give you an actual, it's not 100% accurate, but it's very, very accurate. So I can do that with several different credit cards, or if I remove a collection, I can get you a potential increase in score and what it would be. So that can definitely help you out, and then I can share that information with you. You can make those adjustments through either your credit card company or the collection agency to get your credit score higher.
So not only am I an agent, but I'm also going to discipline you like your mama. Listen to your lender. If your lender tells you you need to do something, if you need to just pay something off, it could be something super small that's going to boost your score. That score is literally going to impact your interest rate, your down payment amount, the kind of programs that you can get, all the things. So if they give you advice on what to do, highly recommend that you listen to it. Otherwise, what's the point of making a plan?